Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com. We've been in business every market day since October of 2002, and you can tell by the gray in my beard that it's been a while. But anyway, we're having a great time in this market. Market's been choppy, base, not a whole lot going up, not a whole lot going down. Every day it's been kind of a wacky, what we call price exploration, right? The price pushes up to the resistance, tests them, maybe goes a little bit above, comes back down, all the way down to the support lows, tests those, maybe a little bit lower, back up again. And that's been the kind of market we're in and have been in that market for several weeks. The good news is that we haven't lost a penny of our capital, and in fact only gained every week year to date. And here we are getting toward the end of February, and we're just about to close today on our 8th green week in a row, and we haven't had a red week since last year. And I'm not even sure when we had a red week in December, to be honest. I'm not sure that streak. I don't really pay too much attention to streaks, but I think it's a little bit more than 8 in any case. So if you want to join me, this is coming to you live from the options room. If you want to join me and a great group of people that are all trading options, we only do long calls and puts. Every now and then we might do a spread. Every now and then we might do a wheel play, but mostly 99% long calls and puts. Go to the subscribe button, scroll down to the live options room. And if you want to trade stocks, ETFs, and micro E-minis with me, then and a bigger group of people, because this room's been around a long time, the live trading room, you can add that on at a 40% discount. All right, so I'm promising to keep this kind of short because I do need to get back into the market. We had a lot going on today. We had the GDP report came out this morning, and it was awful. It was like expected somewhere around 4%, came in around 1.4%. A big downside miss. Market seems to be taking it in stride. Then we had an upside miss on the PCE prices, which is supposed to be the Fed's preferred way of gauging inflation. But the good news there is if you drill down into the different sectors, you're going to see, I'm forgetting now exactly how that looked, but some of the sectors were actually pretty good, that they came in lower. And I think one of the bigger sectors that came in higher was the oil and transportation segment, energy segment, and that's because oil has been rising on geopolitical risks. So I think the market pretty much understands that this little bit of a bump up in inflation is likely transitory. Wasn't that the word? Where am I thinking? Transitory. And if that's the case, then the market is going to look past that. The other big thing that came out today was that the SCOTUS, the Supreme Court, just knocked down Trump's tariff plan completely off base. It just said it's illegal all around. And so now Trump is coming back with, I'm not even sure. I haven't really dug down in the details, but we can bet that there will be, between the president, between Congress, and between the Supreme Court, there's going to be some jockeying and jousting and positioning all around. Trump still wants to put 10% tariffs on the rest of the world, like the entire world, everybody but us, even though his tariffs just got struck down, and there may be some way that he can do that. I don't know. I don't know the legal ramifications. But the good news is that the market doesn't seem to mind, doesn't seem to care. And, you know, as I say, we let the market dictate what it wants to do. Now, I do have a map going forward over the next couple of weeks at least, on into the end of March, early April. I'm going to show you that map for the S&P, the NASDAQ, pretty much the same map. I think the small cap index is going to be okay over the next couple of months, like a pretty good place to be. And we're already in calls of IWM in the options room. I don't think the Dow is ready to go just yet. It's been a little bit squirrely, and it's got some issues going on there. And I think some of the banks have been weak, and some of the energy stocks are kind of topped out. So I would avoid the Dow for now. But the NASDAQ and let's just look at the NASDAQ. The NASDAQ right here in quite a long base, four months or so. The support line is very, very clearly marked. The resistance line is clearly marked. And now we're kind of hovering just off of that support line. It's getting a little bit sticky, trying to get back up to the top, and I don't think we will. Not on this leg. So we might get back up to test these range highs up in here, 25,450. And in fact, let's do this with a QQQ because, I've got all kinds of stuff on here. No, let's go back. I'm sorry. Just forget the numbers. With QQQ, it's right around I don't know, 610 or so on the upside, the top side of this range and the 50 period moving average. And I do think we'll hit those next week, probably toward the end of the week. It's going to be another tight, choppy, up, down week, likely, because the market needs to price in all the stuff we just had out today. And I don't think that today is the only day it's going to be pricing that in. But we do have some room to the upside. We've got NVIDIA earnings coming out. We've got deep oversold, undervalued positions in Amazon, Microsoft, Facebook. We now have positions in all three of those over in the live trading room. And the software sector is still kind of very weak and not looking like it's ready to go just yet, but there's a lot of value there too. So I do think that the NASDAQ has a good week ahead of us. I wouldn't say it's going to be great. It's not going to be like a big green stick, but I'm hoping I'm wrong. I could be. But just a testing of the range. Let's scroll in a little bit here and see if we can pinpoint where I think this is going. So first move in my little map is up next week, right? We've already started that rally. I think we started it on Tuesday of this week. Wednesday was a back and fill day, and Thursday is a follow through confirmation. And that follows the big reversal bar, the slam heavy volume reversal bar that took out a lot of stops and knocked a lot of people out of the market. And oh boy, the sky is falling. And people worried, oh, the data coming out and Trump tariffs and SCOTUS and all that was going to be horrible. They got out on Tuesday, right? We had a 4-day week this week because of Monday holiday. Everybody got out on Tuesday, and then it was all up from there. And that happens so often. But frankly, to me, the NASDAQ, the QQQ, the TQQQ, the MNQ, these are trading positions I would not recommend, even though I do think we're going to have a decent week next week. There's just going to be a little bit too much volatility and not enough upside traction to make a swing trade worth it. The next swing trade in NASDAQ, in my opinion, should be to the downside. And I think that's going to start in early March, if not the very first day of March. So here's my map, right? And I don't think it's going to be a big crash. I'm not looking for anything horrible, just up for next week and then down. It's going to be back and forth into, that's already into April. That's going to be too much because I think April is where we get a nice rally back up to that high, but it's going to be a while, right? So March is going to have to be, if I'm correct, and I could be wrong, March is going to be a time of patiently sitting out of the tech, or if you want, put on something like SQQQ or TECS or SOXS. These are ways that you can ride the downside if you want, but I think there are better trades out there. So we can talk about energy. I think energy is going to be very good. Silver, I think, is going to cool off very soon, if not next week. But gold looks very good. I would stay out of the miners, except for copper miners, which I really like. But the gold miners and the silver miners are likely going to, for whatever reason, they're just not showing. I mean, you had these amazing earnings that came out, Newmont and Hecla. Hecla's a silver miner, Newmont's a gold miner, and they both came out with world record historic earnings last night and this morning, and they're down. They're down quite a bit. So we've got gold up about 3%, 2.5% today. Where is it? 2%. It's up 2% today. Silver's up almost 7% today. We had a nice silver trade on, and I did exit a little bit early, a little bit below the high of the day so far, but I just needed to take a nice profit. It was a very quick profit, and that was in the options room. And so we're flat on silver right now. I'm out of all of the miners. I'm out because I had a little bit SIL and SILJ shares on for a while. Took that off for smallish profit. Took a nice profit in silver, but we're still long gold in the live trading room, and we just got long copper miners in the options room. And I think those are good places to be. So energy, maybe some biotech. And what was the other? Oh, I think staples are going to come back. They've taken a big hit. And with tariffs out of the way, or at least in theory out of the way, Walmart, Costco, Procter & Gamble, these guys should do quite well because they've been hampered by the tariff thing. So Staples, you can play that with calls on XLP or UGE, which is the 2X version for staples. Consumer discretionary is kind of like it's all Amazon and Tesla. Both of those guys are coming back, and Tesla I think might even be in breakout mode or close to it. Amazon is rallying back off a very deep drop, so it could just be a dead cat bounce. Tesla, I have my doubts about Tesla getting too far above the downtrending channel it's in right now. But anyway, that's just the map. Okay, that's just the map. And as I always say, we trade day to day. We let the market decide what it wants to do, and we respond to what the market is doing. We don't tell the market what to do, and we don't try to anticipate too much. Don't try to anticipate what we think it's going to do until it actually does it. All right, so let's take a look at those stocks I just mentioned. There's Amazon. See, way deep down on earnings, big miss. Not quite sure why. Maybe that's tariff related. I don't know. But most of the MAGs are down on COPX. Too much COPX spending on AI without any clarity on where it's going in terms of growth. But Amazon looks like it's coming back, and if it can get into the gap, which it probably won't right away, but maybe a couple of days at this level, then it's got a nice chance of getting back up to like 220. Tesla, here is the downtrending channel I mentioned. It's all right up against that. And the nice thing about this little formation here is that we did have the deep cut low, and now we're printing a nice little higher low, and it's right underneath that trend line. I suspect it will pop out. It's going to test the top of the range right about there, maybe get all the way up to the 50, and then another rollover after that. So it's a short-term swing long from here, but I suspect that the next big leg for Tesla, like everything else in the NASDAQ, if I'm right about March, is going to be a bigger leg lower. All right. Now, S&P is pretty much the same story. It's just that the range that we're in is quite small, very tight, much tighter than the NASDAQ, but it's also having, like the NASDAQ, having some trouble getting back up to the top side, and I don't think it's going to get there. I think we get a little bit higher next week, and then we get the rollover in March. I totally hope I'm wrong about all of that, and if I'm wrong, I will apologize. We're not in any way positioning ourselves for a big drop in March. We have no bearish exposure whatsoever right now. It's all longs all the time, but we're just getting ready, right? We're just being prepared for that, for that event. All right, let's take a look at silver and gold. So I do think silver is about, well, actually, I could be wrong about that. Yeah, there is some, yeah, look at that, nice little breakout. And there is if you squint, you can kind of see this little inverted cup and inverted head and shoulders, which is typically quite a bullish pattern and quite reliable as a bottoming pattern. But the thing is, that neckline, you don't want to see it at a bearish angle like that. You want to see it either horizontal or even slightly bullish, and it's neither one of those. So this is the kind of thing that tends to run up, tends to draw in a lot of people, and then it runs up into the range highs, which are right about there, and then it rolls over sharply and strongly. It traps the bulls, and then it rolls over. Now, I may be saying that because I just sold my silver this morning, and we sold a little bit under the high of the day. Happy to take a profit. Maybe I'm, mad at myself for not holding on, but that's typically what happens when you get a pattern like this that is not well formed. Then that's what happens. We're also seeing a real drop off in volume down here in silver. So the trade, a lot of folks that I follow on Twitter, some folks in my pro trading group, we've got a cycles guy in there, and he's actually pretty good. We've got an Elliott wave guy in there. Tends to be, in my opinion, too bearish, but he gives some interesting stuff. And then we've got guys that only trade commodities. We've got silver, gold, corn, soybeans. They trade all that stuff. They only trade commodity futures, and that whole group right there that I just mentioned have been a bit leery about silver going forward. So I'm kind of glad that we're out, and we'll see where it goes from here. Gold, however, in my opinion, is a different story. It's a different animal altogether. Silver is, more of a demand for its industrial capacity, and gold is more a demand because it's a safe haven. It's an asset play. It's a safe haven against inflation, which we just saw we have, and it's also a good, strong bulwark against a falling dollar, a weak dollar. And the dollar's been pretty strong, but it's in a very bad downtrend, and I suspect that downtrend is going to continue. Gold should really shine as a result of that. We're also seeing central banks hoard gold, and there's still lots of constraints on supply chains and getting it out of the ground. So gold looks good, and this is a different kind of a pattern right here, right? So instead of a inverted head and shoulders with a slanted or a bearish neckline, we've got something more like a cup and handle. Cup and handle is even a more reliable pattern than the inverted head and shoulders, and here it has a nice horizontal neckline. So we're almost right at that neckline. I think that's probably going to give way, and then we could see in March, as the stock market is falling, we could see gold go back up to near the highs, 55, 5,600. I'm not so sure that's going to happen, but I do think it's at least there by the end of the year. I think gold is, it may be the best place to park some cash for a while, right? For months, not just as a swing trade. I think silver, we're back to swing trading it as far as I'm concerned until that changes. But gold could be very much of a longer term play. So we got into the copper miners. Copper has been, that's COPX, copper has been lagging. The price of copper has been lagging, but the miners have been doing this pretty bullish thing right here, which is printing a bull flag off of a nice momentum run. And look, you're well above the 50-period moving average. The downside fall per gold and silver was much shallower and higher low, and now we're breaking out of that bull flag, and it just looks great. Really, really, really good. I would like to see a little more volume coming in. Maybe that's going to happen after the breakout, or happen next week, or it happen in March when the rest of the market is not so good. But this looks really good. So I like gold. I like silver as a trade, and maybe even a short coming up next week, but not as a hold. And then I like the copper miners. Those are three sectors that if you need to rotate in and out of something, that might be a good place to go. So oil and energy has been the new silver, and oil is, we're long oil. We got long oil somewhere in that green stick. So we're okay so far. It's just doing a little back and fill off of the breakout move that came yesterday. And I don't know, that could probably be extended over here, and then we would put this more like that. But anyway, it's a breakout nonetheless. And yeah, I really don't think it's going to fall back as long as there is saber rattling going on with Iran. So there's geopolitical pressure on oil, which also spurs energy. We can take a look at XLE real quick. And we have on some XLE calls in the live, in the options room. And I put those on too late. I mean, it was already in its ascendancy there, but it was a small position, and I said in the room when I put it on that, hey, we can probably get, average in a little bit with adding some on a dip. Well, we're getting a little bit of a dip today, but it's not the kind of dip I'm looking for. I would have to see it come down to the range lows around 53.30. So right now on fairly light volume, it's holding the highs, and energy is the new silver. So I do think that energy is a good place to be. Okay, so that's all. I'm going to get carried away if I don't stop looking at sectors. There isn't much more to say. The staples, industrials, I think will do pretty well over the next few weeks. I'm not so sure yet about healthcare. Maybe select on a select basis. Yes, I would stay out of software still for a while. All right, let's take a look at the MAGS, worst to best. So worst is Oracle. It's still in a no-go zone, and I've said this many times. This is the pattern you're looking for to end the downtrend. We just don't have it yet, right? You want to see a higher low. It could be possibly printing that here, but we're right at that low again. And then you want to see a rise and a breakout, a close, and a confirmation above the most recent pivot high. That would be around 167. And here it is at 148. So it's got a lot of work to do. Stay away from Oracle unless you want to short it, but I'm not so sure I would do that. Now, I really did think now is putting in a little bit of a base, but it needs more time. I do think that it's probably not going to get below the 97 printed low there, and it's just building this little. I don't know what it's building. Maybe it's a cup and handle. Maybe it's going to be a double bottom. We just don't know yet. But I would stay away from it for now. We do have some on in the live trading room as a long-term hold, and it hasn't done very well. So I have half a mind just to dump it, but I really do think it's coming back, and the CEO is out buying shares, which he hasn't done in a long time. Excuse me. And there's some other, and funds are buying now as well. So and some good funds, right? Druckmiller and some other guys. All right. XOM is your big, largest cap of the oil industry. It's coming back in, but it's been very strong. Walmart, as I said, nice drop down, but I think with the tariffs off the table, if that's true, even a reduction from 25% to 10%, we should see Walmart catch a nice bid. It's a nice looking dip. It's a little too straight down for my taste. You want to see more of a 45-degree angle on these pullbacks like this one here and this one here and this one here. But it will probably come down, test the 50, build a little bit of a base, and then you can look at going long. But I do think that the staples sector should do pretty well starting next week. AMD. So I did nibble a little bit this morning on AMDL. Then I had immediate buyer's regret, but I'm still in it. I'm just going to hold. It's just a small little position, what I call a nibble position. And it's because they've been holding the support lows very nicely. There was bad news out a couple of days ago. It's recovered from that bad news. That's always a good sign. And volume in last little bit of trading has been pretty good. You've got a fresh stochastic. You've got MACD where you want them, which is down below the zero line and starting to pinch. But we're not seeing yet a buy signal. So it's just taken a little time to get off of this support level. It got down here, it bounced, got down here, bounced here and bounced here and bounced. And now we're just down there for about 4 days and not doing much. So we'll give it a shot. But it's a good low risk position, right? You put your stop just below the low of the most recent range, which would be around 192. And your target would be the top of the range, which is like 220. And that's a lower risk, higher profit kind of reward. We looked at Tesla. Let me see. Google's doing really well today. Big green stick off of a deep cut low. Amazon, we saw that big green stick. The memory storage stocks, they've been up and down, up and down. We've been in SanDisk, Seagate, WDC in the options room. We've been in and out of Mu. I think we're back in Mu now. Mu calls Micron in the options room. And those guys, you'll be red one day and green the next, red, green. And what they're doing is discounting and pricing in the risk associated with these much higher share prices because it really rallied like crazy, right? It was down here around 121 and then got all the way up to 450 in just a matter of a few months. So yeah, you're not going to keep going at that pace higher. You've got to consolidate to allow valuations to catch up and all of that. But that's all it's really doing. And this is Micron is just about ready to break out and print another new leg higher. WDC also good in that space. It's been up against this range high, range top here and back up again this morning. And, it's going to maybe take a few more days to break out, but that looks good to break out. And same for STX. Okay. NVIDIA's up on earnings and it actually looks pretty good, but that's a very tight, unusually tight base for NVIDIA. And I suspect the earnings themselves, the top and bottom line will be fine. It's going to be forward guidance where this company probably gets a little stuck. And I really think it's going to be kind of a non-event. I don't think it's going to break out and carry the market higher. I don't think it's going to crash 10, 15% the next day. I think it's rather going to be something that is pretty much already known by the market. It's just that the market is looking for something really extraordinary, and I don't think they're going to get it. So that's my take on NVIDIA earnings, but I have no position other than long-term shares, which I'm not selling. And I would just kind of stay out until after the earnings and then see how it does. And then we're pretty close to that March pivot, which I think is going to be to the downside. All right, that's all I want to say. Let's jump over real quick. I want to show you a couple of things with TipRanks, and I use this site a lot. I use Market Surge primarily for my scanning tools and for fundamental and technical analysis. And it's so easy because you just type in the ticker symbol and then you get all the numbers come up, right? You get the sector strength, you get the relative strength, you get the timeliness, you get margins, and it just comes up with numbers or letters like grades. And then you get this comp score, which combines all of that together into a single number on a scale from 0 to 100. And a 99 comp, it doesn't get any better than that. And that's usually the set of 99 comps that are also, large in size, good volume, not penny stocks. Those are the ones that I tend to focus on for trading. But TipRanks is another place you can go, and there are a lot of ways that you can get good trading ideas from TipRanks, and let me just show you a couple of them. Okay, well, first of all, let's say NVIDIA, right? So if you're interested in NVIDIA and you kind of think, hey, should I do NVIDIA or should I buy LRCX, Lam Research? You type in NVIDIA, and it will give you the analyst forecasts. I always toggle on top analysts. These are the guys that have the best track record. And you can see that they're all on a strong buy. There are 31 people, that's a lot, of top analysts that are ranking NVIDIA. 31 are at buy. There aren't any holds, there aren't any sells. Obviously, it's the biggest company on the planet. And 40% upside price target, which is very healthy, right? Very healthy. These are guys saying from Oppenheimer, RBC Capital, Needham. These are all prime guys, right? They're all 5 stars, and they're all saying 40%, 27%, 27%, 40%, 32%. And these were reiterated this one was yesterday, this one was 2 days ago, right? So that looks really, really good for NVIDIA. It's as strong as you can get. Now, if I'm comparing NVIDIA to, let's say, LRCX, not that they're identical, but they're in the same broad category. Strong buy, 25 ratings, but we've got 3 holds, so that's a little bit of a red flag. Top analysts, here are the 5 stars, and buy all the way down. But look at their price targets aren't nearly as high as NVIDIA, and there aren't as many of them. And some of these guys were out a fair bit ago, not just yesterday. So this would give me the edge toward NVIDIA. So if I had to choose between those two, I would say go with NVIDIA. So that's one way you can use TipRanks, but here's another way. You go to the ideas, and instead of you bringing stocks to TipRanks, TipRanks brings stocks to you. You click on top analyst stocks, and once it populates here, I'll show you how to use this. So you've got, these are all stocks that are ranked by upside to price target. So current price, these are really low price stocks. 473, the price target consensus of the analysts, 23.67. It's way up there, right? 400%. Now, does that mean you should buy this guy because it's going to go up to? No, of course not. In fact, it might only be one analyst, and it might be not even a 2-star analyst. He's got a horrible track record, but he's out there banging the table on Carvomed. So anyway, you got to. This is how I like to do it. First of all, I like to go with large cap stocks. So we get rid of those little penny stocks, and I would go with stock rating strong buy. Just weed out all the bad ones. And I'm not going to do sector, but I'm going to rank these. Where am I going to rank these by? Well, it's already ranked by to the price target, so let's just leave it at that. All right, so these are the stocks that you would want to drill down on to see if there's anything in here that you like. Go through the top 10. Now I can see there's some stocks on here I would not touch with a 10-foot pole. I would not trust MicroStrategy. Zscaler might have some value. Hood, I think, will be okay as a recovery play, but not right now. We're actually in CRDO. We're in the calls in the live options room. So this is one that I do like. Chewy, I haven't looked at it for a while. DraftKings, not so sure. It has been out of the favor with the market. NBIS, we've traded that quite a bit recently. App, I have an interest in App. I'm not in it, but I'm interested in seeing it recover because it's a lot of fun to trade and it's got great growth numbers. So anyway, these are stocks that you would want to drill down on further. Easy way to do that. Let's say Chewy, because I'm kind of interested in Chewy. So you go to the analyst page, just like we did before. And strong buy, 10 ratings, only one hold, 68% upside target. It's very, very good. And if we scroll down, we can actually do this. Let's only look at the 5 stars. And so these are at least 4 stars and up. And these guys are on buy all the way down the line. Quite a wide range in price targets, so that's a little bit of a head scratcher. But this guy was out yesterday, and this guy was out about 6 weeks ago. So maybe that's the difference, right? 6 weeks ago, he looked at it and he said, oh, it's got a 70% upside target. And this week, maybe because it's come up a lot, it's down to 7.5%. All right, but that's one of the things you can do with TipRanks. All right, guys, I'm going to let you go. I'm going to produce this, drop a link in both of the rooms. We'll get back to trading. We've got at least an hour to go. And right now, let me check our profit and loss. Well, we're underneath the highs of the day in terms of profits, but we're still nice and green. Got a nice 1.2% profit on capital, which is pretty good because we're still sitting on some cash. All right, guys, God bless. Have a great weekend, and I'll see you back in the trading floor in just a little bit. Bye for now.